It's great news. Hey, welcome to everybody that is on here today with myself, Jimmy Hobson, National Sales Leader, Patton Gade, National Director of Military Lending. Today, we're going to talk about serving those who have served or those who've served. So we're going to kind of go through this, talk about VA home loans, the nuts and bolts and the basics. There is a question box over up on the upper right-hand side that if you do have questions, raise your hand. We'll try to pay attention to that and go through it as we go through certain sections to make sure you guys get taken care of. So with that said, I'll allow Patton to introduce himself and then we'll get started.
Well, ladies and gentlemen, like Jimmy said, my name is Patton Gade and I'm the National Director of Military Lending here at UMortgage. My absolute passion is VA home loans. So a couple years ago, so 2023, I was the #1 VA loan originator in the entire country. My whole career is really been about serving the VA customer in the best way you can possibly serve them. And so that's what I'm here to do. Hopefully we'll drop some knowledge on you here today that will help you navigate all the different complexities or not really complexities, but the nuance of a VA loan and show you why it's so important to just understand the basics here so that we can do the best thing we possibly can with serving our customer.
Awesome. Awesome. Excited, guys. Excited to bring this to you. Go ahead, Caden.
So first off, what I want to talk to you about a little bit about is what the opportunity is. Obviously, the United States military is the largest employer in the country with over 3 million employees worldwide. That means, number one, there's a tremendous opportunity. But the second part of this is that veterans in general are very, very loyal. So you take great care of one veteran, especially if you happen to be around a military base. You take great care of one veteran, they're going to know, or let's say an active duty person, they're going to know a lot of people that are going to be moving there over the course of the next year. As a matter of fact, when I was active duty, I'd get a phone call from a friend that was going, hey, I'm going to PCS to Fort Campbell. I know you're already there. Tell me about it. Where do I want to live? Who should I talk to? Do you have a realtor? Things like that. And I was always happy to give them a great referral to somebody that I knew who was going to take care of my friend. And so the military just in general, super loyal. They will become one of your best referral sources and help you grow. Now, the other part of this, and something that I think is actually somewhat sad, is that only about 15% of veterans have ever used their VA loan benefit. And that falls on a couple people's shoulders. One, it falls on loan officers' shoulders who just, some loan officers just don't understand or they're scared of the VA loan. The other thing is, over the years, there've been some old wives' tales that have raised their ugly head and just kind of become part of the narrative in the real estate world, where realtors talk to each other and they go, "Oh, I had this thing happen and it was a VA loan." Well, okay. Sometimes, and we're going to cover some of those myths and some of those misconceptions around VA loans and make sure that you're clear on what the actual rules are, and so that you understand just really the ins and outs of the VA loan.
Got it. Okay. So to your point, Patton, obviously, 33% of veterans that have a mortgage indicated they didn't know about the VA loan program. Now, I will say this, it's better now than it used to be. Back in the 70s and 80s and 90s, it seemed like it was much harder and much less information. It's better now, but it's still not good enough. 46% of veterans reported their lender had not discussed the option of a VA loan. In 2021, 2020, and 2022, when we were in the frenzy in housing market, I know of many lenders that talked veterans out of using their benefits because they were afraid they weren't going to get an accepted offer, or even realtors did that. So we want to dissuade all those myths today so that as we approach this and as the market starts to soften and rates go down, we can make sure we put our best foot forward to help our active duty and veteran borrowers succeed in this market. Okay.
So let's talk about some of the myths in the VA loan. And let me tell you kind of my opinion on where a lot of these myths sprang from. Okay, so the first myth that we're going to talk about is, that the VA borrower, just because they're doing zero down payment, means they're a weak buyer. But actually, before we get into that, let me go here. Here's where I believe a lot of these myths came from. It's not to say that bad things didn't happen with the VA loan. We'll talk about appraisals. We'll talk about all that stuff. Here's what I believe. Here's where this stemmed from. Number one is, if you didn't know this, most like 99% of VA loans, the VA will never see that loan until after closing. And then that's when the lender sends it to the VA for guarantee. The responsibility for the underwriting and all the decisions is pushed down to the underwriters. Hardly anything ever has to go to the VA for approval. Okay, so what has happened over the years is that essentially, a lender or a loan officer who didn't know all of the different nuances of a VA loan would make a mistake in the initial application, the initial 1003, and then it goes to underwriting. Well, guess what? The underwriter absolutely knows all the rules and knows the right rules. And so that underwriter would say, you know what? No, that's denied. It doesn't meet residual income, or it doesn't meet this criteria. And therefore, it gets denied. But what did the loan officer say? The loan officer never went to the realtor and never went to the borrower and said, I'm so sorry, I made a mistake. Very few people have that kind of intestinal fortitude. So what happened is that loan officer would go to the realtors and go, you know what? Man, the VA screwed up. I really disagree with them. I've been fighting with them with this for a week, and they denied the loan. Was it really denied by the VA? No, VA never saw it. But all of these things compounded to the point that all of a sudden now everybody thinks, hey, the VA is this big, bad, bureaucratic monolith, and maybe they are, but it's not the VA's fault when a loan got denied. It was probably the loan originator. And so that's the important thing here is, who are you working with, and do they actually know the VA program inside and out? So myth number one, zero down payment means a weak buyer. Jimmy?
Got it. Perfect, guys. So these are stats that I've gotten and I've pulled up. I teach a CE class for VA loans here in Utah, and this is the stats we pulled. And this is also stats that come directly from the VA. So this is the VA borrower of 2023, median FICO score of 723. I would tend to wager that Pat and I both have people that probably have a higher average credit score than that based on who we're dealing with. Median liquid assets is close to 20 grand. The average VA loan amount nationwide is 372. And veterans that made a down payment is 25%. Now, people would wonder, why is a veteran making a down payment? Well, a couple things to think about. Number one, they have the ability to. They're a solid buyer, and sometimes it makes sense. Sometimes it lowers the funding fee and things like that that you guys may not be aware of, but it makes sense to get into a home. And so 1/4 of the buyers out there are actually putting a down payment. So the cool thing is they're not having any issues. They're great borrowers. In fact, they're as good as any conventional buyer in the market right now, with enough assets and enough income to do the job. With an average loan amount of 372.86, that's actually very good. Some areas where I operate in is closer to like 460, 470 right now. And then some areas like the Midwest or, in the 200s, or Michigan for example. But that's the average borrower today. Compared to an FHA borrower, that's dramatically better, much higher credit score. Assets probably very similar, but it does work. And so this is the average borrower for 2023. Go ahead, Caden.
Well, let me add one thing here before we get too far, is that a lot of times, especially so back in January 1st of 2020, the VA change, or there was a law signed by President Trump that was called the Blue Water Navy Act, and essentially the main part of it was that people that served on a ship back in Vietnam and may have been exposed to Agent Orange and things like that were given additional benefits. But one of the other things that was part of that bill was that it expanded the VA eligibility to include, so if you don't have any VA eligibility being currently used, there is no loan limit anymore. So a lot of people aren't aware of that. I think we cover that a little bit later, but essentially, we can do loans to $4 million, $4.5 million, $4.7 million with no down payment. And I would challenge you to, just because there's no down payment, I don't think that means that the person that can afford the payment on a $4.5 million VA loan with $4,000 a month in taxes or something like that is a weak buyer. So just zero down does not necessarily mean that buyer has no money. As a matter of fact, it just might mean that they're super smart with their money, and they know that tying it up in a house and in the equity in a house may not be the right move right now. Next slide.
Excellent.
So the next myth is that VA loans are hard to close. And I will tell you, as somebody that does a lot of VA loans, I'll tell you this is absolutely false. Next slide, Caden.
It goes kind of goes to
So,
your point, Pat. And sorry to cut you off, but it goes to your point about who's doing the loan, right? They're not hard to close if you know what you're doing. And so you can attest to that when you talk about this. But if you go to the right people that actually know how to structure a loan correctly, they're going to fly right through.
so part of actually written in, so VA pamphlet 26-7 is the VA loan Bible. It gives you absolutely everything you could possibly want to know about a VA loan and what the underwriting, uh, the I mean, every rule that you could possibly need, from rental income to can you ignore, a collection, or any sort of thing that you would want to know is in there. But one of the things that's literally written into the VA loan pamphlet is that underwriters are encouraged to consider every possible appropriate factor in seeking a proper basis for approving a loan application for every qualified veteran. That, my friend, is a very, very strong statement. Um, so why do lenders love VA loans? Well, for a number of reasons. One is that the VA loan, the default rate on a VA loan is much lower than conventional or FHA. Frankly, I think as a veteran, I look at my veteran colleagues and I go, you know what? Why would this be? Is it necessarily because they make more money? No, maybe not. But what it is that they have a very high sense of honor, and they're like, you know what? I am not going to default on my house. I'm going to do what it takes, whatever it takes, to go in and make sure that my home is paid for, and then I'm covering the debt obligations that I have. And so I think that's a big part of it. Another reason why VA loans are great is from a lender standpoint, and this speaks to why I believe that they actually have a higher approval rate actually than a conventional or an FHA. And one of the reasons is because a VA loan, essentially at the very basis of what a VA loan is, a VA loan is a 25% guarantee on the loan amount. So if you buy a $400,000 home, essentially all the VA loan is that the VA is guaranteeing that first $100,000 of that loan. They're guaranteeing it to the bank, saying, you know what, this person served our country. Therefore, if they default on their loan, we're going to make good on this portion of it, the top 25%. So therefore, somebody buys a house for $400,000 and they go into foreclosure a couple of years later. As the bank, you only have to sell it for $300,000 because the VA theoretically would cover that extra $100,000 that was lost in the loan process. And so what that does, interest rate and risk, it's all about, or interest rate is all about risk, right? That makes the VA loan a less risky loan. It makes the VA loan more approvable. It gives potentially a lower debt ratio because you have a lower interest rate. It doesn't have PMI. So all of these things contribute to a VA loan being a fantastic loan. Another thing is, as an originator, it gives me an awful lot of I like to call them outs. If you play poker or you watch poker on TV, how many outs does this guy have? Well, I've got ways, there are adjustments that I can make. For instance, let's say the borrower is putting 5% down in order to get a lower VA funding fee. But then let's say the appraisal came in short and there was an appraisal gap coverage or whatever. Like, I can still actually finance 100% of the value. And so just because it came in a little bit short doesn't mean that the borrower still has to put 5% down necessarily. They could just shift to 100% financing, and that extra 5% that they were planning on using as a down payment could actually maybe cover the appraisal gap. And so it gives you a lot more flexibility with a VA loan than any other type of loan. So that's why I believe they absolutely, they are not a harder loan to close.
Well, and Patton, to your point, because of the flexibility of the underwriting, that gives you a lot more leeway as well, where you can attack higher debt to income ratios. Sometimes, you'll only have one spouse working. You can use some of their VA benefits that are active duty for housing and subsistence to be able to gross up, to be able to qualify them for more house as well, because of the flexibility of the underwriting and the fact that they're much more aggressive when they underwrite these loans, because really it comes down to what they can afford at the end of the month and how much they have left over. And that's a big part of it. And that's why they perform. And one thing that people have seen is, even sometimes when you look at these, you say FHA low credit score loans, a lot of those lenders will use VA's residual value guidelines to calculate if they allow the FHA borrower to qualify as well, because it's a proven process that works. They know it works. That's why they do it. So, okay.
So the next myth is that VA loans take too long, that they take much longer. Actually, as a matter of fact, the average VA loan, and this is from 2023 data, the average VA loan closed in 32.9 days compared to 42 versus 43 unconventional. But the reality is that typically the limiting factor on the speed of a loan closing is going to be the appraisal. Okay, so on a VA appraisal, the average, every county or every regional loan center has a little bit different guidelines, but um, generally it's 2 weeks. So from the time I order the appraisal with the VA to when it has to be turned into us is 10 business days in just on average. Okay, so or not on average, that's like the maximum it is across the country. And so essentially, we're going to get the appraisal within 2 weeks. During that time, we can have the title report done and we can have all the underwriting done, and we may just be sitting around waiting on a VA appraisal. So when I have a realtor call me and say, hey, can we do a 21-day close on this VA loan? Without blinking, I'll tell them yes. There's no problem with that because I'll order that appraisal on day one, and that 2 weeks will start. I mean, heck, as long as everything goes smoothly with the appraisal and there are no subject to conditions and things like that, I'm going to get that back within 2 weeks. I still have a week to get to closing. That's a piece of cake. So VA loans do not take too long. I've closed one as quickly as literally like 7 days between getting the contract and actually having clear to close. We're actually waiting a day or two for the TRID rules to run out. So very fast.
And back
As
to
long
your
as you know
point
what you're
earlier,
doing.
is the lender has automatic authority as well. So they are underwritten and delivered to the VA after closing. So because the lender has appraisers, or sorry, rather underwriters that are tied to the VA and been through VA training, they can underwrite faster. So that's often the case that we're through most of underwriting before the appraisal comes back. And then we can rock and roll. And I would imagine, for me, I know Patton is probably similar to you. My average term time on a VA loan is probably 21, 22 days across the board right now. So much faster than the national average and significantly faster than FHA and conventional, which is a huge deal because that's always been the biggest gripe is, oh, you can't rush a VA appraisal. You can't get it done faster. Well, we're living proof that you can because we do it all the time.
Next slide, kid. And so our average turn time here at UMortgage for VA loans this year is about 26 days. Now, frankly, I don't know that this stat means a whole heck of a lot. The point of it is, though, I mean, most contracts we get in have a 30-day close typically, and so we're closing faster than that on average. And VA loans are not an issue as far as time to close. The next myth, I hear this all the time, is that sellers have to pay some of the veterans' fees. So the reality of that is that's absolutely not true. It used to be something that was very common that you would run into would be what was called VA non-allowable charges. So VA non-allowable charges were only come into effect when you have a 1% origination fee being charged. If there's not a 1% origination fee, and here at UMortgage, we don't charge a 1% origination fee on our loans, then there are no VA non-allowable fees. One of the old rules, again, was that the VA or that the seller or somebody other than the buyer had to pay for the termite inspection or the wood destroying organism report. That is no longer the case either. That changed about maybe 3 years ago. I think summer of 2021, they came out with a report that the VA said, hey, the buyer is allowed to pay for the termite inspection. So that shouldn't be a hang up either. So a lot of the myth was like, oh, it's gonna put all these fees back on the seller. Well, that's just not the case. So myth busted.
Well, and I would say, Patton, one thing, a lot of people think that if there's repairs that need to be done on the houses, that the seller has to pay for those as well. And that's also not the case. If there's something, for example, and I've done this a bunch of times, if maybe there's peeling paint on a deck and the seller just doesn't want to do it, the veteran can do it if they want. They can go and repair it. If they want the house that bad, they can do it. And so that's been a big thing, is that everyone thought every single bit of damage has to be covered. And of course, that's negotiated in contracts. But the thing that I've experienced is If you want a house bad enough, you're going to do what it takes. And the VA is giving the veteran or the active duty member the ability to do those things so they can buy a house, which is important.
That's right.
So,
So this is a big topic of conversation. Here's what VA pamphlet 26-7 said, and it's still actually until what, August 10th. This is still the rule, is that the buyer is not allowed to pay any sort of commission to any of the realtors. Obviously, the NAR settlement is going to change that, where the VA just came out with a circular couple of weeks ago, a month ago, and said that, as a matter of fact, that veterans will be allowed to pay for their buyer agent fees. And so that's a change that the whole real estate industry is navigating through right now. And but frankly, I don't see a VA loan being a whole lot different than any other loan at this point, as far as how that will be negotiated, and how, what you need to know is not something that's necessarily specific to a VA loan. It's really the same for all loans at this point.
agreed.
Jimmy, you got anything to add on
No, I would
NAR?
just say, yeah, I mean, for that, I mean, I've already had a couple people attack this last week or so. The biggest thing is that the VA, like every other loan program, is allowing these fees to be paid by the veteran and or be paid by the seller and not be counted in the total concessions, because the VA allows more concessions than most loans. So these are on top of that. As long as it's disclosed, and the VA is very clear, as long as it's disclosed correctly on the loan estimates that we're doing, they're going to be fine. It just needs to be documented. And more often than not, in my experience, the last week or so, the agents have basically just been negotiating their compensation from the seller up front. So this is kind of a moot point. Just because it doesn't show it on the MLS doesn't mean they're not asking for it. So that's what I've seen. Literally, I've had two agents in the last few days tell me that that's how they negotiated. They were concerned about how it works, but it doesn't affect concessions at all. And that's always been the biggest concern, because let's say on a VA loan, you're getting whatever concessions you get. They're afraid that if all of a sudden 3% of that goes to the buyer's agent, they're going to lose their ability to pay closing costs or buy downs. And that's not the case. They are separate from one another, which is a big, big deal. So,
Well, that's a good segue to the next slide, Jimmy. And
yeah,
so
there you
let's
go.
talk about VA seller concessions and what that is. So number one is the definition of a seller concession is anything of value added to the transaction by the builder or the seller. So it's really anything of value to the buyer. Okay, so that could be, technically, if you leave a pool table behind or something like that with all the, the big heavy slate and whatnot, like that's something of value, and it should be part of the contract and part of seller concessions. But essentially, the buyer's paying nothing additional for it, and it's not considered customary. Next slide. Here's the key thing, and something that I see a lot of agents don't understand this rule. As a matter of fact, an agent that I work closely with in South Carolina, he had a whole thing on his. He posted something like, "Hey, we sold this house for $300,000 and we got $15,000 of seller concessions." And some other agent jumped in there and said, "That's illegal. You had more than 4% seller concessions." And so there was a whole discussion about this. Here's what the real rule is, okay? Is that the VA will allow the seller to pay all of the closing costs plus 4% seller concessions. Okay, seller concessions could go to pay the VA funding fee. They can go to pay the escrows, a temporary rate buy down, so like a 2-1 buy down. And then here's the key thing, and this is the VA loan is the only one that can do this. I can use 4% seller concessions to pay off credit cards. I've used them to pay off a car before. I've used them to pay off like anything on the credit report, a judgment or a credit, a charge off or something that had the underwriters like, we got to take care of this. Well, guess what? When there's seller concessions in the deal, I can actually use that to help the borrower qualify from a debt to income ratio standpoint. So by taking 10 grand, and if you have 20 grand of total closing costs and seller concessions, 10 grand goes to closing costs. The other 10 grand, like I've paid off somebody's truck. They had $9,000 left. I take it, pay it off. It just freed up $600 a month for that buyer to now help qualify from a debt to income ratio standpoint. Only loan in the world you can do that on, and it's absolutely a fantastic benefit of a VA loan. That goes back to what I was saying earlier with the flexibility of a VA loan as an originator. This is one of the key parts of that flexibility. So if you can negotiate as a buyer agent, if you can negotiate seller concessions, absolutely please do it, because it will give me more and more flexibility just in case things get a little bit funky.
Well, we just had a deal, Patton, where we were using the money for a rate buy down, and then something popped up on credit that had no balance, and all of a sudden it had a $400 payment. So we were able to take the concessions and pay something off to solve that problem. So to your point, that works very well, and it helps a lot of people. One other thing about a VA loan that's unlike anything else is if they don't get seller concessions, if the veteran qualifies, they can actually borrow money to pay their own closing costs as long as it's included in the DTI. So let's say they need 10 grand in closing costs and they can get a loan for $200 a month. As long as they qualify adding that $200 a month to their DTI and their payment, then they can use it to pay off whatever or pay closing costs, which is a big, big deal. We don't see it very often, and hopefully we don't see it very much, but it is possible. If someone, especially in a crazy market where someone needs money to cover their own closing costs, this could be a big deal for people. So.
Yeah, and thinking about that in light of like the NAR settlement, like that could be something like if you needed to pay the buyer agent, you could actually go get a personal loan or whatever from USAA or what have you, and as long as we mix that into the deal, or into the debt to income ratio, it's fine. Yep. So the next slide was closing costs. We just kind of talked about that. So the seller can pay all of the closing costs, and it's completely separate from the 4% seller concessions. So absolutely, and that can include points as appropriate to the market. So if it's appropriate to pay 2 points to buy the rate down or whatever, that could be part of the closing costs that the seller pays for. Here's what I've done with agents in the past, and I get this question a lot, is how do I write this into the contract? And so next slide. What I would typically do would be this, is that, in a scenario like this where you have a purchase price of $400,000 and you think you can negotiate $20,000 from the seller, I don't need the agent to say, okay, I'm gonna put this as $9,000 from closing costs and $11,000 in seller concessions. If you get it written as $20,000 or 5% or whatever the number is, okay, I don't care if it's percent or whether it's dollars. If you write it as $20,000 in seller paid closing costs and or seller concessions, that really covers everything. I can take whatever I need to cover the closing costs. Everything else I can use to help the buyer, whether that's paying off a credit card, paying off a truck, paying off whatever. It's absolutely the best way to do it, and it gives me flexibility as a lender to do what I need to do to make this loan work for you, the agent, and the buyer. Next slide.
Love it.
Love this one. Why don't you start in on this one, Jimmy?
All right. Yeah, my favorite one to argue with everybody. VA appraisals are harder. Myth number 5. Go ahead, Caden. Let's talk about this. So let's say you're getting an appraisal on a house doing a conventional or FHA loan, and it comes back at value. You're kind of stuck with the value. You can dispute it, go through the process. It goes right back to the appraiser again. They look at what you sent them. They say tough crap, and they send it back to you. It's about how it works normally. With the VA, it's very, very cool. So we send out for an appraisal. Appraiser goes out and inspects the house, comes back and sends us an email basically and says, hey guys, unfortunately, I don't see the comps to justify this value, so I'm going to invoke Tidewater. Okay. Now, when they invoke Tidewater, basically, if you want to go to the next slide, Caden, they talks about it. Tidewater essentially gives us, well, go back to the other one. I apologize because it jumped around. So Tidewater, basically, you have 48 hours to produce the comparables. I've actually had loans appraisals come back at 60 or 70 grand higher than list price after we gave them additional comps, because even though the appraisers have access to the MLS, they don't necessarily have every single thing they need. So if Tidewater doesn't work, and then they have the second option, which is the reconsideration of value. I've done a handful of these in my career. Basically, the veteran raises their hand and they say, hey, we disagree with the value you've given us. we want to appeal this. They write a letter, and then we submit stuff to the VA, to the Regional Loan Center. And then the people that work in the valuation department of the Regional Loan Center will take a look at everything and determine if there's more value. Now, Patton, I'm sure you've done plenty of ROVs. I've probably done about 10 in my career, and I would say 7 or 8 of them have gotten more value, if not gotten the full value. So it is a very important thing. Let's pop to the next slide and talk about some of the things that sometimes, actually go one more slide, will you, Caden?
Let me go back to
Go back to
the ROV process. I mean,
Yeah.
it is really very cool because, the Tidewater process is just simply us going to the actual appraiser. And really it's the appraiser, think of it this way, it's the appraiser raising their hand and saying, I need a little bit of help from you, the realtor, to get to the value that you put on this house and on this contract. So it's kind of cool when you think about it that way, right? They're literally saying, I need your help. It is the only loan product where you have the opportunity as a realtor to impact the value of the property before the appraisal is ever turned in. So that's number one. And then number two, the key part about the reconsideration of value is now the appraiser is completely out of the subject. You're literally going over their head directly to the VA. And frankly, I've seen this happen to where the VA was like, dude, the value is the value. And I'm like, well, the veteran says if he can't come up with the 10 grand difference. So if you don't raise the value 10 grand, this whole thing falls apart and this veteran's without a house for him and his family. And the VA literally was like, all right, fine, here's your new value, 10 grand higher. And nobody was BSing, like the deal would have fallen apart because the veteran didn't have another 10 grand. But the VA had really no basis to raise the value, but they're still willing to make an adjustment within a couple of percent. Just to make the deal work. And frankly, the house average appreciation is what, 4 or 5% across the country every year. The VA knew that, within 6 months, 8 months, this house is probably going to be worth what we put on the value anyway. So let's just get we're, going back to that one phrase in the 26-7 where the underwriter is supposed to make everything happen that they can in order to get the veteran into the house. The VA feels the same way. The VA is truly a much easier organization to deal with because they truly do have the heart for the veteran and they want to do the right thing for the veteran. So, I think that's
and to your point, Patton, I was going to say to your point, a lot of times when you try to bypass the appraiser, they don't like you. The way they respond is very snarky. In the VA world, these guys and gals know that there's a built-in process to go past them, and they're fine with that. If they don't feel like they can get the value, they're fine with the VA making the final decision if that's what it takes, because they're all working for the same goal, is to get a veteran into a house. Now, in their defense, it's also their job first and foremost is to protect the veteran. So if the value comes back low, it's because they're doing their job and they're actually looking at market conditions. But I've seen that adjusted a few points, or maybe they missed something, and we're not experts in appraisal, but there's many a time I'll go, well, what about this? And you missed this, or did you miss that? Or it's zoned a certain way and you missed it. They're very open to a conversation. In fact, the VA appraiser is one person that we frankly can talk to. As long as they don't try to influence value, we can have full-blown conversations with them. And one thing I do is when I know Tidewater's coming, the first thing I'll do is say, that's amazing. We'll get you the comps. Are there any repairs needed? So I'm ahead of the game already. And I know you probably do something similar where we know what we're going to attack, because then we can tell them, hey, value's not there yet, but these are the repairs that are going to be needed. And we feel like we can, if we feel like if you provide the right comps, we're going to be good. And so that's a big, big deal. So.
Next slide.
Yep. So we could talk about the MPRs, minimum property requirements. Everyone thinks that the VA appraisal is hard. One statistic that Patton can talk about, and so can I, is the director of the VA said that conventional appraisals come back at 92%, just over 92% of value. VA appraisals come back just under 92% of value, and that is because of the process we just described with Tidewater and obviously reconsideration of value. Now, the VA does have requirements. A home's got to be safe. It's got to be sound. It's got to be sanitary. Go ahead, Caden. Next slide. These are some of the things they're going to look at, right? Lead-based paint prior to 1978. Now, if there's peeling paint on a house that was built in 2010, they're still going to flag you for it because obviously moisture gets into the home. There's wood rot that could cause issues. So we're going to do that. They're going to look at roofs. They're going to look at heating. They're going to look at exposed wiring, broken windows. If you have a well, they're going to look at a private well test. It's got to be done by a third party that's not related to the transaction. Can't be the realtor, can't be the buyer. So that happens more in rural America. I've done a handful of those. I know you probably have as well, Patton. And normally it comes back okay, but if it doesn't, then they got to solve it and treat the water and do whatever they've got to do. But those are the biggest examples of the NPRs we see. And handrails, of course, the one that everyone always gets mad about because anything over like two steps needs a handrail. But do you have any instances of things you've seen?
No, I mean what I tell people is like if there's exposed wiring, if the house is in general disrepair, so exposed wiring, holes in walls, things like that, floors all torn up, like that's probably going to get called out by a VA appraiser. What's not an NPR, next slide, is typically cosmetic work. Just because it's an ugly house doesn't mean it's not going to pass a VA appraisal. Just because it needs to be updated doesn't mean it's not going to pass a VA appraisal. And frankly, if it's all overgrown in the yard, unless when you mow the lawn, I think back to the blue collar comedy tour. If you might be a redneck if you mow your lawn and find a car, you might be a redneck, right? So the yard work doesn't matter unless it's causing damage to the house.
Well,
And
and to
so
that
what we're
point,
talking,
yeah, I'm sorry to cut you off. To that point, what they're usually looking for in like yard work is if there's water pouring towards the house, it's going to have to be fixed.
that's
Water's got
right.
to go away from the house. And so I've had to have people regrade flower beds sometimes. But that's no different than any government loan, USDA, FHA. They're going to want to make sure there's no water getting into the foundation. So that's where yard work in theory would affect it.
So next slide, the typical stuff you see, chip paint, chipped and peeling paint. You see those stairs right there. All they're saying with the stairs is, look, somebody could fall off the edge of that. And frankly, as a dad with kids, like I'd be scared to go visit that house when I had toddlers. Nowadays, if my 11-year-old falls off, we will probably all laugh, and as long as he's not hurt too bad, right? But you got to have some handrails on there just in case somebody is going to fall off the edge. And then rotting wood. Typically, a lot of what I see is around door frames or window frames, garage door frames. You'll see some damaged wood or some wood rot coming up the side or maybe on the bottom of those door sills and window sills. So that's typically what you see. Now, one thing a lot of people don't know is, next slide, you can actually get NPR waivers from the VA. Like there are certain things, like for instance, I've seen one where the appraiser was requiring a handrail on some stairs that was like landscaped weird, to where the house was kind of built on the side of the hill, and to get to the front door there was a series of steps in landscaping, and the appraiser was adamant that we had to have handrails on there, but it just wouldn't fit in the house. Like it just didn't make sense. It would totally destroy like the aesthetic value of the house. And the buyer simply wrote a memo to the VA saying, I waive this. I don't think it's a problem. We're all young. It's all good. And the VA waived that for him. So as long as it's something, depending on what it is, you can get a waiver on some NPR requests. Have you ever had anything waived, Jimmy?
Yeah, I mean, it kind of depends, and sometimes, I've had some cracks in cement that were a little bigger than the appraiser was willing to sign off on because he thought, oh, maybe the VA didn't like it, and so I've gotten that waived. I've not really had to have any issues. I mean, the majority of stuff that I run into is peeling paint because of the weather here. And that's not really one you can get waived to speak of, outside of something normal. If it's an outbuilding or a shed, oftentimes you can tear that down, or if it's not included in the value of the home, oftentimes, and it's built after 78, you can get rid of that as well. But that's really the biggest thing that I've dealt with.
Perfect.
Yep.
Next slide. So, actually, one other thing is the VA will actually allow you to self-certify for a lot of repairs. So what that means and what that looks like is, let's say, that around the door frame needed to be, scraped and repainted. As long as you take a picture and it's kind of the same angle and has the same stuff around it, like you can't just zoom in on it because then you wouldn't know if it was really that same door. But as long as the picture matches the picture that was in the appraisal, a lot of times we can send a lot of repairs we can send directly to the SAR underwriter, and they will actually look at it and go, yep, check, that's been done, check, that's been done. Meaning we can save, just because there's a subject to appraisal doesn't mean that we have to pay the appraiser an extra $150 to go out there, especially if it's stupid little stuff. So that's something that not everybody can do.
I see
So
that a lot with roofs, Patton, where they're missing a few shingles and stuff, and they'll replace shingles and take pictures. I see the underwriter sign off on that stuff all the time. You know, the biggest thing they don't want to sign off on without the appraisers, like wood rot and major damage to that needs to be fixed. They don't like to sign off on that stuff without actually having the appraiser go back out traditionally. But I've even seen them get around that as well. So
yeah, so the big benefits of a VA home loan, number one, is 100% financing. I mean, obviously we've talked about that. We know that. You can have, you can have multiple VA home loans at the same time, and then that's when the conforming loan limit comes into um, into consideration. Is we use that for the calculations that we go through. The second one, gift funds are allowed. Like you can get a parent, you can get I mean, your cousin, you can get your fiance can give you gift funds that cover down payment, can cover closing costs, whatever you want. Lower credit score requirements. I mean, really, that's one of the flexibilities of the VA loan. I mean, I've closed VA loans in the 500s before. The VA loans definitely and it all goes back to what a VA loan is. Well, it's a 25% guarantee from the VA. That takes a lot of risk off the shoulders of the lender, and therefore we can expand those guidelines significantly. So that means the lower credit score, that means lower interest rates, that means lower fees. That gives us the flexible underwriting. And then one thing, not very many people are familiar with the energy efficient improvements, but you can actually finance in, like if you needed to get a bunch of spray foam insulation because the house needed more insulation. I see this a lot more on refinances than I do on purchases, but you can actually finance in some energy efficient upgrades that go above and beyond the 100% financing.
awesome. So primary benefits continued, obviously fully assumable by any qualified person, does not need to be a veteran. Now, I will give the caveat out there that if a non-veteran assumes a VA loan, then the veteran's still attached to that. Their entitlement stays attached to the house until it's either sold or refinanced. So I don't necessarily recommend it to my veteran clients that are selling, but it can be done. There is no prepayment penalty. Of course, there is no mortgage insurance. The VA funding fee can be financed. The VA still has the option of a 100% cash out refinance. Just did one. So it is definitely possible. The VA has the second greatest loan there is behind a VA home loan, which is a VA streamline or an IRRRL. Essentially, it is a way for a veteran to drop a rate, a 0.5% or more, and close a loan in 8 to 10 days with very little closing costs if done correctly. No appraisal needed. Obviously, it's based on them making their payments essentially on time. And it's very simple. We actually have done quite a few of these the last little bit. So Patton can attest to that. And then, of course, like we talked about, seller concessions, 4% plus closing costs. So concessions and closing costs, two totally different things, even though people confuse the two. 4% plus closing costs. So I did a loan about a year ago. It was 1.1 million. He had $60,000 in seller concessions and closing costs. Got a 2-1 buy down, paid all his other closing costs. It was awesome. And so, he was happy as can be because obviously the rates have not been grand on those products for a year or two. So he was very, very happy. So those are the biggest benefits. Over and above, it's just the best loan there is, and it's the best way for a veteran active duty member to actually finance a home at 100% financing.
Next
Go ahead,
slide.
Gade.
So another myth, you can only have one VA loan at a time. Next slide. Actually, the most I've ever seen personally that I've done is we've gotten to 4 VA loans on one person's eligibility. I've seen 4 is the max I've done. There's a lot of math involved in this. I will tell you that you don't really need to necessarily understand it, but essentially the way it works is you've got the county loan limit, let's say, is 766,550 in the majority of counties around the country. If you bought a house for $300,000, you still have 466,000 left over. So now you can go buy another house if you PCS across the country, or if you just wanted to move. Heck, after you've lived there a year, if you wanted to move across the town and buy another house, you can. And so you would have the ability to buy at 466. So let's say you went and bought a $200,000 house. Now you PCS again, you still have 266 left over. You can get that third house with a VA loan. So that's just kind of the basic math with it. I wouldn't try to memorize the basic entitlement versus bonus entitlement. Just suffice it to say that when a lot of people look at, a lot of loan officers look at a certificate of eligibility, if their brain starts to melt and they have absolutely no clue what they're looking at when it says, the $36,000 basic entitlement, remaining entitlement is zero. I can't tell you how many veterans I talk to that goes, well, I just talked to so-and-so and they said I have no VA eligibility left. And I pull their COE and I'm like, dude, you want to buy a $500,000 house with no down payment? You still have eligibility. And they go, well, why don't they know that? And I'm like, because they're idiots. So you got to work with somebody that actually knows what they're doing here, because when the entitlement calculations start flying around, people make some serious mistakes.
So I will second this, Patton, real quick. Where I've found this to be a problem is, number one, a lot of people don't think they can get more than one VA loan. That's a big one. But some of the older veterans, when times were tighter in the 80s, I've had veterans actually lose homes to the VA. And even those guys and gals can still get another VA home loan. They're tied to the conforming limit and what they have left of entitlement. But I've done probably 5 to 10 homes for veterans that maybe lost a house in the 80s or 90s that are buying another house because they still have the remaining entitlement left. And so that's a big deal. And I personally have only had 3 on 1, but I can see how if you got people PCSing from towns where there's less expensive houses, that you could get 4 for sure.
Yeah, and then here's the other. Since you brought up the whole short sale or foreclosure or whatever previously, I had a guy who years and years ago had foreclosed on a house, but he only paid this was back in like 83 or something like that he bought a house for like $70,000 or something and foreclosed on it. Well, he lost a little chunk of entitlement. The VA takes away all the entitlement, but you don't know how much the VA actually lost. And so this guy now, his life's completely different, we're, 30 years later or whatever. And now he wanted to buy a house that was $1.5 million and wanted to use a VA loan. Well, he'd lost a bunch of his eligibility. And so he was like, well, if I use a VA loan, I'm going to have to put this massive down payment down. It ended up being like he was going to have to put $200,000 down on this house. Well, it turns out if you call the VA and say, how much money did you lose? They will tell you. And if you pay them back the money they lost, 15, 20, 30 years ago, then you get all that eligibility back. So what we did is we called the VA, and this cat, he lost a big chunk of his eligibility, but the VA only lost like $2,500. But all of his eligibility was used up because the VA lost even a penny. And so it was much more beneficial to him to pay the VA their $2,500 back. Hey, sorry, VA, you lost $2,500 back in 1996 or whatever it was. And now I'm going to do 100% financing on $1.5 million with no down payment whatsoever because I got all my eligibility back. So understanding what the process is, understanding the whys, understanding the hows is really the key to all of this. So next slide. This is another entitlement calculation, but what I'm going to do to you is I'm going to skip from this one. We'll get to actually this next. Go ahead and go to the next slide. So this is all we talked about. These are all myths. They're not true whatsoever. VA appraisals, like we said, they're easy. None of this stuff is hard. VA loans are absolutely, like, in my opinion, easiest loan on the planet. Less confusing to me than a conventional or an FHA. You call me and say, hey, can you do an FHA loan? I'm going to go, I don't even know how to spell FHA. I can spell VA, so maybe it's just the 2 letters versus 3. I don't know. But from an entitlement calculator, go to the next slide. We have a wonderful entitlement calculator on our website. If you want to scan this QR code, we'll leave it here for a little while. This QR code, it'll take you to the VA entitlement calculator. And frankly, it's fantastic. Not just because I helped design it, but what you can do is you can put your city, your state and your county in there. A veteran could go in there and say, I want to buy a house that's, $400,000. I already have another house. I have VA entitlement used on my certificate of eligibility of, X number of dollars. And it will actually tell you what the minimum down payment is required. in order for them to buy a house with a VA loan. So it's going to help dispel some of these myths. In addition to this, that you can put in your approximate taxes. You can put in your approximate homeowners insurance. You can put in the HOA fees. It'll actually calculate when it calculates the payment. You can put the interest rate in there that you think you're going to get. It'll calculate the VA funding fee. So as the down payment goes, as you put in 5% down payment, your VA funding fee drops. That's all going to work out into the monthly payment that's on this. So it's a fantastic calculator. It really lays everything out in a very nice, neat, concise way. So scan that, and it'll take you to our website, and you can look at VA calculations, run some scenarios yourself. If it's your own personal loan or personal situation, you can look that over. So.
And one thing, Patton, for people, because I get this question all the time, is if you're helping one of your clients do this, if you're a realtor helping one of your clients calculate how much they have left, the amount of entitlement used is based on the original loan amount, not on what they've paid it down to. So say the loan was 400, they paid it down to 300, their entitlement they've used is based on that 400. So a lot of people think, well, I paid it down to 250 or 300. The entitlement amount used doesn't change until it's refinanced or paid off. So that's one thing, that some people get caught up in, and oftentimes gets calculated incorrectly by a loan officer because they haven't pulled the certificate of eligibility yet. So that's a very important thing about doing, is pulling that COE, or at least, reaching out to one of the loan officers that you're working with, pull that COE so you know exactly what the client is eligible for.
That's a really great point, Jimmy. You mentioned the certificate of eligibility. That is the first step in the VA loan process. The very first step should be pulling the certificate of eligibility. If your lender does not do that, like day one, action one, I mean, first time I talk to somebody that's a veteran or active duty, first thing I do is I log on to the VA website, I throw in their social security number, I throw in their year of birth, and boom, 9 times out of 10, probably 95 times out of 100, boom, I've got their certificate of eligibility. I know exactly whether or not they're eligible or not, starting from like very, very first part of our conversation. So that's important. You don't want to wait until 2 weeks into the process to pull a certificate of eligibility and find out that somebody had a foreclosure 25 years ago that they forgot about. You don't want to, or I had one once where somebody they let somebody assume their loan who was not a veteran. And so the guy's like, yeah, I sold that house. And I go, wait a minute, it's on your certificate of eligibility. I'm like, did you sell it? And it turns out he didn't. He let it be assumed. And so the eligibility was still counting against him. So that could theoretically be a problem if we hadn't caught it up front. So I think that's the last slide. Next slide is questions. Does anybody have any questions? If you want to throw a question into the question box, we would be happy to answer it. We got a few minutes left.
To your point, you just mentioned, Patton, while we're waiting to see if people have questions, is there are some lenders, and it used to be a lot worse before the VA changed the rules, but there was a few lenders nationally that used to order appraisals without a COE when you could do that. And they get to the very end and the veteran wasn't qualified, and all of a sudden the deal died after making them pay for an appraisal and making them run through underwriting. So it really is truly the only document that matters in a VA home loan is a certificate of eligibility. And no one should ever go shopping or go under contract without that document. That's my biggest pet peeve. I know it's one of yours. It's a giant deal, and it's one of those things. So,
well, ladies and gentlemen, I think it doesn't look like we have really any questions at this point, but if you do have questions, feel free to reach out to Jimmy. Feel free to reach out to myself. What I tell everybody, every realtor I ever talk to, is if you're ever in a situation, maybe you're the seller agent or maybe you're representing a buyer, I don't care if I'm the loan officer on the deal. Like I would like to personally do every VA loan in the country, but just because I'm not on that loan doesn't mean that I won't pick up the phone and answer your questions and help steer you in the right direction. Maybe the lender you're talking to, or let's say you're a listing agent and you're having a problem and there's something going on and you're talking to the lender and they're not giving you what you feel like is the right information. Call me and I'll be the truth broker to you and go like, look, here's what they're maybe trying to say, or I'll try to help you navigate through to find the right answer, or maybe give you the right questions to ask that other lender to get to the bottom of what's really going on in the process. I know the VA process inside and out, upside and downside. It's absolutely my passion. And so feel free to reach out to me if I can ever be of service to you.
Yeah, agreed. I mean, that's the commitment I think you and I both made. Obviously, I did not serve like you, but my commitment's always been, regardless if we're involved in the transaction or not, we put the veteran and the veteran's family first. And
That's right.
if we can help solve problems, if we can help navigate. I have one where they ended up going, it was a condo approval. It had nothing to do with the deal, but I gave them everything they needed to know to get to the VA to get a condo approval. Because guess what? That's doing right by the veteran. Period. End of story. So that's what we do.
100%.
Yep.
All right. Well, Jimmy, thank you for co-hosting here with me. I appreciate you.
You got someone asking for your number, Patton.
Oh, I will give my number out. I will give that my number out anywhere. My phone number directly is 623-866-3974. I don't know if I can just type that in here or not. Doesn't look like I can. So one more time, 623-866-3974.
Awesome. Thank you for everyone to join today. We appreciate you guys. Don't hesitate to reach out if you were invited by a member of our UMortgage team. Please, connect with them. Let us know if we can ever help you. We want to make sure we take care of every veteran everywhere. So,
Absolutely. Have a great day, everybody.
thanks, guys.